you gotta go fishing, right? Like you have to get after it. Like you have to cast the rod. Like you can't expect anyone to oversee everything that you do.
Welcome to the House Hacking Success Podcast, where you'll learn the path to free rent and financial freedom through real estate. Featuring your hosts, Brad Labrie and Drew Klingler.
What's up, everybody? It's your host, Bradley Labrie, and today I want to talk about the podcast sponsor, Rentometer. Whether you already have an established rental business or analyzing your first rental deal, you know that getting the rent right is crucial to lowering investment risk and optimizing your rental income. That's why the go-to source for rent data is Rentometer. Property investors and property managers rely on Rentometer because it is the fastest and easiest way to access quality rent data for addresses and neighborhoods anywhere in the United States. You can also research current local comps, trends, and property data. Don't take our word for it. Rentometer analyzes over 500,000 rents per month and gets rave reviews from customers. My property manager, myself, and my clients all use Rentometer anytime we are looking to purchase a new property to know exactly what we can get for our properties. Go to rentometer.com today to get your 7-day free trial and save up to 60%. Grow your rental business smarter with Rentometer.
What's up, everybody? Real quick before we start the show. If you go down to the description or the show notes for this podcast episode, there's a link, and that's going to send you to a page that you can download our free ebook on. This ebook is really good. Brad wrote it, and it covers everything that you need to know about house hacking in a very structured order so you can put all the pieces together. All right, enjoy the show.
Welcome to episode 50 of the podcast. We have your all-time favorite guest, Matt Porcaro, back on for your third show. Matt, we appreciate you coming on.
It's always a good time with you guys, and I appreciate you guys have a great listener base, a really smart listener base, and I'm glad that I'm able to bring some value to you guys and to your audience.
Yeah, for sure. So each episode, you were on episode 3 of the podcast, as well as episode 41. And in both of those, we sort of went into detail on the 203K loan in general. You are at the 203K Way on Instagram, and I believe it's the 203kway.com is your website. And so for anyone interested in getting more details, you have a course, just a great community over there. But episode 3 and 41, we touched on the details of the 203K loan. Of course, I have a fond spot for it. I utilize that loan as well personally. Matt, I know you have as well. But today's episode is going to be a little bit unique because we're going to dive into sort of forecasting 2021 and beyond, and potentially a lot of the foreclosures that could be on the horizon, and how a renovation loan like 203K can be utilized.
Absolutely. Oh, yeah. I mean, this has obviously been a very crazy year for everything, right? Real estate market is definitely included in that. We've seen things that have never really happened before. We're also seeing some things that are kind of reminiscent of 2008. So, this next upcoming year, time will tell really what's going to happen. But I think the writing on the wall is that there's definitely going to be some opportunity coming ahead. And I think, utilizing a renovation loan, a 203K loan, is going to prove to be really beneficial over the next year or two.
Yeah, I couldn't agree more. And I think, like I said, I have a fond spot for 203Ks. I think there's a ton of opportunity. And I'm really glad we had you on there. So let's sort of jump into question number 1. We touched a little bit before the show about how, realtors in specific and the lending world is sort of pushing conventional wisdom. Let's put it this way. Conventional wisdom back in April, May was that when people lost this many jobs, when such a dramatic increase to unemployment came about, it probably lowered the demand for real estate, but it's been the exact opposite. And it's been pushed by low interest rates and prices going through the roof in real estate. And obviously that cycle can't continue forever. Talk to us a little bit about kind of what you see going forward with these foreclosures and sort of your forecast for 2021.
I think you hit it on the head with in regards to no one really expecting what was going to happen, right? I remember kind of foaming at the mouth thinking that, I'm going to be able to snap a whole ton of deals come when COVID hit and all like the initial lockdowns happened, right? I thought, everyone was going to get scared out of the real estate market. There were a lot of people losing their jobs left and right, and that there was going to be a lot of opportunity. And what ended up happening, as you know, as markets tend to always surprise us, it was the complete opposite. What ended up happening was, the Fed, in a very knee-jerk reaction, just dropped interest rates down to near zero. And what happened was you have a lot of the you have the millennial generation, a lot of people that were moving into cities, moving into luxury high-rise buildings for work and everything. All of a sudden, didn't need to be close to work anymore. They were all working from home. So very quickly, everyone ran out into the suburbs and started buying up anything that was out there. To add fuel to that fire, people were afraid to sell. The boomer generation, they didn't want to leave, with COVID happening. There was a lot of unknowns out there. So they wanted to make sure that they stayed put and weren't really listing. To add even more to that, the foreclosure and eviction moratoriums came on, and you basically got rid of your entire low end of your market. Every healthy market has a top end and a low end, right? There's, supply and demand, and then, different types of product in the product line, right? You have, your higher end, your higher end upper middle class neighborhoods. Then you have your lower middle class neighborhoods, and then you have your properties that maybe are tougher to sell because they're pretty beat up. The reality is that all these people that were looking to move out into the suburbs in a hurry were just really only looking for, the stuff that wasn't beat up.
The U.S. Census Bureau just came out with statistics just this past week on the fact that they anticipate 33% of homeowners and renters facing eviction and foreclosure within the next 2 months. And so, what that really looks like, because the courts are so backed up and all of that, we won't really go into, because there's so much to figure out as far as what kind of Congress figures out for the American people and stuff. But let's talk about the 203K specific. Like, let's anticipate that there is a certain percentage of these homeowners that are going to lose it. We won't necessarily, you can dabble in how much you want as far as where the economy goes, but mostly, like, where is the opportunity for 203K borrowers coming up in 2021?
The big upside with 203K loans is they allow you to buy beat up properties, as is properties, foreclosure properties that you couldn't just buy. These millennial retail buyers, they couldn't buy any of these houses anyway. So you're basically eliminating all of the competition right there. Very few people, obviously people on this podcast, people that listen to this podcast, people that want to make a good financial decision. Yes, that's your competition. But anyone listening right now, you're in the 1% of the 1%, right? Your average, Sally and Johnny, they just want to move in ready home, and they'll pay whatever they have to get it, right? It's an emotional buy for them. The 203K, you're able to build value into your property, right? You're able to get a deal, so to speak, right? You're able to build equity in your deal so that, the first property or the next property that you buy, instead of, paying absolutely top dollar and being underwater on your mortgage for the next 30 years or for a couple of years if the market tanks, you're going in with equity, and you could use that equity to buy more houses, expand your portfolio, invest in a business, whatever that is, right? So what I'm getting at here is the 203K really just allows you to only compete with other people that are buying renovation loans. Here's the reality. People always ask me the question. They're like, how do you compete with cash buyers? The answer is you're not supposed to be competing with cash buyers, because the reality is I'm a cash buyer, right? In my flipping business, I can't pick up properties and make a deal as easily as someone using a 203K, because the 203K loan, as you guys may already know, is an FHA loan. You only need 3.5% down. You're using owner occupancy, right? You're going to house hack with it. So you're getting that super low interest rate. These interest rates are super low now. They're probably going to stay low for a little while, right? So, whereas a cash buyer, people tend to think that cash buyers are just guys that sit on mountains and mountains of cash, right? No, the reality is they're using other people's money. They're using other investors' money. They're using hard money. They're using private lenders. But all these people, they want to see returns on their money. The average return return for a private lender or hard money lender is 10%, right? So you're putting a 10% interest rate versus a 3% over 30 years. My deals are much harder to find than yours. And so this is what I'm getting at. When the foreclosures hit the market at a discounted rate. The foreclosures are definitely going to be discounted. The banks know that they can't sell it at top dollar because they understand that it's probably beat up and you're buying it as is. So you're really only fighting against very unsavvy fix and flippers or other people within the 203K market. Foreclosures really aren't good deals for guys that do cash and fix and flips, right? You're able to pay way more than a fix and flipper is, ideally. Now, in this last year, you saw people overpaying for things left and right. But in a healthy market, in a healthy economy, the beauty of the 203K is you're going to be able to pay what the bank's looking for, and you're not going to have to really worry about the competition with these fix and flippers.
Yeah, for sure. And once a lot of these like HUD homes and some of the other Fannie Mae properties and such, they will actually have time periods for owner occupied properties. So whether it's single family, whether it's multifamily, they allow 15 to 30 days, depending on the particular protocol for that property, for only owner occupied, which allows these renovation loans to come in and have even less competition up front. Where cash buyers, if they're buying it for an investment property, they can't even make an offer until a certain day in the cycle. And so that's another advantage for sure. And I bought mine from a bank. So it's very doable, it's very practical. I believe yours was as well.
Yeah. It was exactly also with that program you were just talking about. HomePath calls it the first look period. The truth is that a lot of banks have this. They're called different things, but a lot of banks, they whatever they get on their end, whatever benefit they have on their side, selling to homeowners, to owner occupants. HomePath isn't the only one that does something like that. Again, HomePath calls it the first look period. It's like a 15-day period. I put in my offer. They reasonably have to accept any reasonable offer that comes in during that period. And again, in a healthy market, they're not screening offers, right? You're seeing a lot of very immoral stuff happening right now in the market. You're seeing a lot of offers getting screened, everything like that. And there's a lot of blood in the water right now. So, it's, like you said, with the foreclosures that are going to hit the market, they're out there. They're absolutely going to happen. I mean, there's no way the banks aren't going to get their way. So when that time comes, that little flood, that little glimmer of opportunity, it's going to be important to really have your ducks in a row and be ready to strike when the iron's hot.
Yeah, so let's talk about that. We have a lot of listeners that maybe have already done one,
Sure.
or not necessarily a 203K, but maybe they've done their first house hack. There are also people preparing for 2021 to do it. Let's talk to like the preparation, because back in April, like we were talking about, in retrospect, kind of trying to figure out what was going to happen this summer, like a lot of programs increased the barrier to qualify. I personally had about $1 million worth of just clientele that lost financing during that time period in a lot of different realms because credit scores increased, that income ratios increased, things like that. Like, how should people start to, prepare for that? Because, they may need to increase their credit and things like that.
So here's the thing. One of the biggest rumors that got put out there as soon as COVID hit was that the 203K loan was shut down, right? That it wasn't happening anymore, which is just simply untrue. What happened was, here's the thing, right? You have a lot of these lenders out there, and I've spoken about this on previous episodes, but the biggest mistake people make with the 203K loan is they go to lenders that don't understand the 203K loan and how it works. I fell victim to it. A lot of people do, right?
Yeah, I did.
And the reality is that this is one of the many products that they offer, but it's not it's not their bread and butter, right? Their bread and butter, at least during, this crazy market turn that we saw with, dropping interest rates, refinances happening like crazy, and then people buying up houses like crazy. their bandwidth was really only focused on that retail buyer market, right? Why are they going to waste their bandwidth, when things were already crazy with, with COVID kind of putting regulations on things and access issues and stuff like that? Why are they going to waste their bandwidth on something that they don't do anyway? The reality is the 203K was never shut down. There's, the real reality is that the guys that were out there doing them, that were experts in the 203K loan, continue to do it because that's their bread and butter, right? And those are the people that you want to work with. You don't want to work with the guys that do 203Ks here and there. It's a very niche specific loan product. And if you don't work with someone that actually knows what they're doing, you're going to have a bad time. And that's the reality of it. But the good side is that when you find the right people in every market, and they are in every single market, when you find the right people, it becomes just like any other loan. It has its own protocol, it has its own set of steps, but it's no harder than anything else on any other loan out there, right? As long as you know what it is. So the big thing was that people, again, a lot of loan officers that just don't understand the loan or the product or anything about it. They just talk smack about it, right? They tell people, oh, it's not out there. They closed it. They shut it down. FHA never shut it down. Nobody ever shut it down. It never stopped. It was the guys that never really did them anyway, just decided to not do them and used COVID as an excuse to get them off their books.
Talk about that 60-second hack, because that's amazing. I found a couple of lenders here in Metro Detroit through that a long time ago for clients and such. Talk about that 60-second hack you talk about of finding a lender, the lender that is actually doing the most deals 203K in your market.
Sure. So since the 203K is an FHA loan, right? It's an FHA backed loan. Government, when they do things, everything needs to be public knowledge. So there's something out there called the 203K endorsement summary, and it's very quick. You Google it, you type in 203K endorsement summary. The first thing that comes up is a link to the FHA website. And what it's going to do is it's going to give you a list of months and years, right? You scroll all the way down to the bottom, it'll give you most recent month, the most recent year. What it's going to do is it's going to give you a list of all the companies that did 203K loans in your market, right? And what better way to know exactly who's doing it than the guys that are on the website actually doing them day in, day out, right? So you use that, and what you'll find though too is, and this is something that I've learned over time, is that some of those are wholesale buyers. So these are buyers that they're basically like the end buyer for these loans, right? So when you get a loan, they get sold off to someone. So sometimes there's these bigger banks and they don't service the loan, but they buy the loan. But all you have to do is you call these people up, and if they are a wholesale, if they are a wholesale buyer of 203Ks, just ask them, okay, well, who's the loan officers that are sending you these in their market, right? You just take it one extra step. But basically what you do is you look for your market, you look at which company is doing the most of these in your market, you call them up and you ask them which loan officer can help you out. Who know better than the guy that's doing the most of them in your market, right? Because they're also going to connect you with the professionals in your market as well that are experienced with the loan.
Yeah, for sure. I mean, I can't stress that enough, because I also we had very similar situations on our respective properties, because we didn't have lenders that understood what they were doing, and it makes for a real nightmare. Same thing with a real estate agent. I mean, I know mine had not went through it at the time, and so finding a real estate investor friendly real estate agent, as well as a lender that actually knows what they're doing, and mostly the lender, because they're the ones that really will set the tone for anticipating things and making sure it goes on a timely schedule. So that hack was instrumental. I'm constantly referring people to that little video that you have on your Instagram page, because it's really critical to find somebody that actually knows what they're doing, because everyone will tell you that they know of the product because they might have been briefed, but going through a few versus reading over the script of how to do it is totally different.
Absolutely. I mean, getting people ask me, how do I do this? the most important step of this entire process is finding a lender that does these things. They are experienced in the loan. They're going to direct you where you need to go, and they're going to be able to help you out because they've done this 1,000 times, right? That is square one. That you could usually get yourself through the whole process if you just start with that one thing. That's again, it's the tiny lever that makes the big move, right? It's the best bang for your buck, and it's going to make your project run way easier than it could, and really is kind of the reason why there's so many horror stories out there, is because people go to the wrong lenders. That every horror story about this loan always starts with a lender that never did it before, and it continues with them not telling them how to find the right contractors, and then just falling into the loop of just getting a fly-by-night guy to do their work. And that's how these things fail. But I tell my following, I tell my community all the time, like, if you get those two people on your team early, and you have the right guys, it's just going to run itself.
Yeah, for sure. Let's talk about the other component of the loan, which is the consultant.
Sure.
I was unaware, during my deal that consultants existed, because my understanding, I believe, is the streamlined 203K is not, you don't necessarily need a consultant, but the one over 30 or 35,000 you do. Is that the general basis?
Yeah. So
I just say that because I didn't, I was instructed to do under 30. So I did about 32,000 on my loan, and then I brought out about 30,000 out of pocket just so that it would stay streamlined. Mm-hmm. So I didn't know about the consultants. Talk about the consultants, because I feel like they're an amazing piece of the puzzle.
Oh yeah, I like to call them the 203K tour guide. Here's the thing, right? There's 203K consultants out there, and just like any other profession, there's good ones and there's bad ones, right? At the end of the day, though, in addition to the lenders, who's going to know this process better than them, right? As I said before, the good lenders are going to point you to the good professionals, and a good lender is going to use a good 203K consultant. So 203K consultants are kind of like lawyers if you get arrested by the cops. They tell you could use your own lawyer, or one will be provided for you. So I like to tell people, if they want to take it a step further, to start calling around the 203K consultants in their market. And you could find that very easily. Again, quick Google search 203K consultants, and there's a map, and you can kind of call down the list. And you're able to find the guys that are doing a lot of these, right? It's the 80-20 rule, right? There's 20% of the consultants doing 80% of the 203K projects in your market, right? So you want to locate those guys, and you kind of want to build a little bit of a relationship with them, because they're going to guide you through the process. They know how to handle the contractor. They know how to build a scope of work. They roughly know what the cost estimate's going to be, and it's important to lean on them, right? You do pay them. It's a sliding scale. It's basically like an inspection. Inspections usually go $400 or $500 depending on your market. These guys charge about the same. The difference with their inspection is kind of contingent on what the property will be when you're done with the renovation, right? So these 203K consultants, they're basically, they're like the neutral third party, okay? So what they do is they come in on your project, and they look out for you, the borrower. They look out for the bank to make sure that the bank is getting a furnished property when they're done. And they're also looking out for the contractor. They're making sure that the contractor is getting paid for the work that's owed to them. So it's really great. I tell people all the time, it's like flipping a house on training wheels, right? Because you're kind of removing yourself from that typical like middleman issue when you're trying to figure out, if the contractor's owed what he thinks he's owed, and you get into an argument with the contractor because you think he needed to finish this to get paid and he didn't. And this is a neutral third party, and he looks at what's done in the property, and he pays them based on what's done. It happens in draws, very similar to any other project. You get started, 25% in. You call up the 203K consultant. The 203K consultant comes, takes a look. They're like, yep, everything looks good. Here's what you're going to get paid for. This is the work that you've done. And the contractor knows that they're getting their money. That money is in escrow. It gets held in escrow by the bank. So the money's there. They can be confident knowing that the money's there. And they could be confident that there's going to be a guy that's there that's going to objectively look at everything that's been done on the property and pay them out. And they're a really great resource. And I want to touch a little bit on the 203K Streamline that you mentioned. It's called Streamline. I think it's actually called a Limited now. It's kind of the same thing, but like you said, yeah, it's a $30,000 limit with a $5,000 contingency built on top. So people throw that $35,000 number around a lot, but there's a lot of confusion with that. A lot of people think that you need to stay under $30,000 on your renovation. That's not true. That's only if you want to do the Streamline now, or the limited version. The thing with the limited version is that like you said, you don't get a consultant involved. And what I will say is that the consultant is worth its weight in gold, right? Because they're keeping the contractor honest. They're helping you build a scope of work. These days, 30,000 unfortunately doesn't get you too much. It depends on your market. In New York, 30 grand, I could sneeze and blow 30 grand on a flip, right? But in some of these other markets, 30 grand can get you a decent renovation, and it's good to have that neutral third party that can oversee. So as much as you don't need a 203K consultant on a Streamline or a limited loan, a lot of banks often ask for it. They often push it anyway. And that isn't to say you're limited to 30 grand, right? In many cases, you're going to be over that. And there's absolutely nothing wrong with doing a full 203K, as they call it, right? The renovation potential that you have is virtually limitless. It's more limited to your income and your financial criteria more than it is, a cap on like how much you could do.
Yeah, for sure. And that's why it's so important to be prudent and listen to podcasts like this, go through your course, because you just don't know what you don't know. I had no idea what I was doing. I had just heard about the 203K. I obviously did not know you. I had no idea anyone. I didn't even know the product existed, much less anyone that had ever done it. So this was all coming from the lender, and they, for whatever reason, did not want me to exceed that 30,000. And so I just can't remember why it was such a issue about going over it. But I just decided to come out of pocket with the rest, because we end up building another unit, took a 3-unit, turned it into 4-unit and stuff, and there's just a lot of red tape. So I just ended up coming out of pocket for the rest. But yeah, I mean, it's so important because having a consultant, is crucial. And I've walked a couple of clients on the buy side through it now. And I mean, consultants are very inexpensive, and they help out a ton and add just an incredible amount of value. And I mean, 203Ks are fantastic. So being prudent, my point was just being prudent and figuring out these things up front can save you a lot of time and hassle.
Oh yeah. And I like to tell people that my pig-headed, like dumb determination got me through the process. I'm one of these people where you throw me in the water without any swimmies, and I'm just gonna have to try to fight it out, right? What the craziest thing about this 203K loan and this, the process for me personally when I first did this, I couldn't find any information on this thing, but I did know that it was just so powerful. It was like there's got to be a way to do, like, how could I not do this? Like, I was just trying to look for any reason why it wouldn't work, or like any reason why it wouldn't be like super fruitful in terms of equity and cash flow potential for me. And like every stop I like tried to make and tried to figure out why this would be a bad idea, I just kept looking. I'm only coming out like 10 grand out of pocket. Like, even if this thing completely flops and I make 50,000 equity or 20,000 equity, I'm doubling my money. You know what I mean? And it was like, every stop that I made, and like every time that I came to a road bump, it was just like, it didn't matter, right? It didn't matter, because at the end of the day, it's just so powerful when you know how to leverage it. And, I tried for years before I got my first deal. I tried like 3 or 4 years of just trying and failing every which way, trying wholesaling, trying like to get other people to lend me their money to flip houses. Like, I just wanted a deal so bad. And when I finally found this thing, I was like, man, why did it take so long to figure it out? And then I realized why. Like you said, there's no information out there, and I wanted to be prudent. Like I wanted to do the research, but there's nothing out there about it. And the reason being is, it is complex. And my goal with it my goal since I started this community was, people were asking me and leaning on me for advice on this. And, I wanted to just become a resource for people and kind of take the taboo away from this loan and just really spread the word so that more people could take advantage of it and really, really cement their financial, their financial goals for their life, building off of this one deal.
Yeah, for sure. And I tell people all the time, there's a lot of money in extreme optimism, and there's a lot of money in extreme fear. And you generally see like pundits, they're on one side or the other for the most part, And so I'll never forget, like in 2016 to like 17, I was flipping like you do. And people like Robert Kiyosaki and a lot of people in that sort of realm, we're talking a lot about, financial crash. And I mean, they've been talking about that for like 5 years now, but like, I remember thinking, man, like I gotta prepare and things. And one thing I talk about the 203K with people and why combining like the BRRRR strategy with house hacking, which is kind of what this aims to do, loan aims to do, is that it creates that buffer. And so like even at the depths of 2008, in most markets only retracted about 30%, depending on the market, of course, just in general, the average of the property values.
Yeah.
And so, if you're able to buy a property at 70% and continue to have that buffer, no matter what the economy does, even if it retracts to the depths of, say, a Great Recession, which I don't know if, we're predicting that or not, but just even if that were to happen, you have that buffer. And that's why, adding value like this loan does is so crucial, is that it's that nuance between it. Like you can hedge against your particular market increasing and growing over time, but yet you create that buffer in between to where if anything happens, you're still okay and you're not underwater.
Absolutely. I get asked all the time, Matt, what's happening with the market? What is now the right time to buy? Is now the wrong time to buy? Here's the thing, man. The strategy I teach, the 203K way, as I call it, it's recession proof. And it's basically because it's built off of those things that you were just talking about, right? Like I don't care where we are in the market cycle. If you're buying 60 cents on the dollar and you're making sure that it's going to cash flow comfortably, you're going to make it through any recession. Because number one, if you have to move out for whatever reason and let's just say that your home value does decrease under what you owe on the property. If it cash flows healthily, you just hold it. And you're earning on that cash flow. Your tenant's paying your mortgage off, and you're paying down that principal out of no pocket of your own, right? The reason 2008 happened and killed a lot of these buy and hold investors is because they were buying with absolutely no meat on the bone, and nobody was buying with any cash flow potential. They thought that these things were just going to be up and up and up, and the property values were going to just keep going up, and people didn't buy right. At the end of the day, if you can get a deal in any market, right? Some of the best deals are made in the worst markets, and it's because people stay patient and they know what to look for. And you can do that right now. You know what I mean? Even at the top of the market, I have students that I coach that are still buying deals. They're still finding deals. They're out there. It's just obviously sometimes it takes a little more time than others. The challenge right now is not having the foreclosures on the market, but that isn't to say that there isn't as is properties that are out there that are just beat up that need a buyer, right? And as long as that's what you look for, and you look for something that you could build enough meat into the bone, it's recession proof. It really is. I think with the house hacking, you're hedging yourself against that as well, right? You're combining two strategies that are making sure that you are really making a super solid and smart financial decision.
Yeah, for sure. I mean, you look at the amount of people that lost their job this year or had their hours reduced for a period or a long period of time, maybe still currently. But we have a lot of friends that were able to ride situations like that out because they had such a low cost of living.
Oh, forget it. Yeah, of course.
And so, I mean, like you said, you can find these deals in any market. You can find them in a lot of different ways. My wife and I are closing on another multi-unit this coming week.
Nice.
And I've helped a few people now find landlords that had taken for granted their properties for a while, and all of a sudden everything hits and tenants take advantage of them to a higher level, right? And they completely either don't pay rent for several months, maybe they do a combination of not paying rent and destroying the place. And there are just a lot of places in my market that aren't foreclosed on yet, but it's just that landlords self-managing have not given the properties enough attention, and now they're in distress to where there's opportunity in that, because it's such a small subset of people that are willing to take that on. As landlords, you have the ability, especially with a 203K, to renovate the property if it's been neglected, and there's just a lot of opportunity, whether it's on market, off market, to drive for dollars, find properties that have been a little bit neglected, find people that aren't, that are trying to file for eviction. You can find lists like that and mail those landlords. Just a lot of opportunity right now, I think, because landlords are getting hit hard right now too. And that's why I mentioned that 33%, because whether you're buying foreclosures or you're just buying from landlords that aren't getting any money, there's opportunity.
So here's the thing, right? There's 30, a third of the population is not paying their rent. Okay. Yet the property values are sky high, right? So you're going to have a lot of landlords, older landlords, tired landlords that are really going to want to get the heck out of their small multifamilies, right? And again, that's going to be an opportunity that's going to present itself undoubtedly in the next couple months, the next year. So it's just knowing that that's coming, knowing that it's on the horizon. It's not about timing. Like, I tell people that try to time the market end up waiting forever until they die. You know what I mean? You're never going to time the market correctly. If you could time the market, we'd all be millionaires, right? But the reality is that you look at where the market is right now, and you make an informed decision on where it's at right now. It's more important to take action on it than wait to time the market. Timing the market is like just this like big newbie thing that everyone gets stuck on because they're trying to like min-max their results and they're trying to like maximize the potential. But the reality is, like, I tell my following all the time, like, you got to be looking, when you look for deals, you got to be looking for like singles and doubles. Like, people get so caught up trying to hit a home run that they never actually execute and they never actually get started, right? Like, that first deal opens so many doors for you. That second deal opens even more doors for you. Like, it's such an exponential growth in real estate investing, like in the first couple deals. And then once you have a couple under your belt, like, it's just off into the races at that point, right? But the first one is the hardest. And trying to swing for the fences for that first one, you already have a lot of things working against you. Don't add that to the mix and try to look for like these crazy deals. Like, just strike while the iron's hot. And the iron's hot right now. Like, it's definitely, especially for those small multifamilies, like, that's awesome that you picked one up. But you got to tell everyone listening right now, like, there's so many more of those out there that are coming. There's people not paying their rent. There are people, but they know that they can get good money. So a lot of these guys are just going to want to exit. They're going to take what's theirs. They're going to, make the equity that they have on the property and then wait it out, and maybe start over or maybe just retire. Who knows?
Yeah, no, in my market, Metro Detroit, there's a lot of opportunity in that. And, I think one unique thing with house hacking is the nuance that comes with it. Because, people like Brandon Turner echo your sentiments. There's just a lot of and I do as well, that your first deal doesn't have to, certainly doesn't even have to be a double. It could be a single. My first deal, I lost every penny. Yep. my tenant got murdered. It was just a nightmare, and I lost every penny to it.
Man. Yeah.
And, but, I tell people the same thing. If you focus on just the ability for it to cash flow, and, I think that tells everything else. I'm 100% agreeance with you. These speculators that base solely on appreciation. I mean, that's a scary game to play.
It's a death sentence, man. It's a death sentence.
If you focus on the numbers of cash flowing, especially if you're a first timer, you could read 1,000 books and listen to 1,000 episodes of the podcast. It'll never replicate what you learn and the confidence it gives you to do your first deal. And Absolutely. So it's hitting a single.
It took me years to figure that out, man. It really did. Like, I'm an analysis paralysis guy. I'm an engineer by trade. I need to know every step. and I mean, you're 100% right on that. Like, I think one thing that I try to tell people, if there's like one piece of real estate advice I could give anybody, is that you have to go before you're ready. You're never going to be ready. You're never, ever, ever going to be ready. The deal's never going to be perfect. The stars are never going to align. You have to jump and take that leap at like a 50% confidence level, right? Like, I walked into this 203K. I had no idea what I was doing. And in retrospect, I still don't even know how I got roped into it. Like I didn't do it by like courage of my own. I had a lender who was a family friend who kind of pushed me into it, right? Like before I knew it, I was signing the documents for my loan, and like I just blinked, and it was like, because he was pushy. Like I thank him so much for just pushing me over the edge, and like just like not giving me a choice, just like, again, just throwing me in the water without my swimmies on, just being like, try to stay above. And it took me years to get there. So I mean, that's the biggest piece of advice I could give, man, is like, yeah, like of course read, of course use like listen to podcasts, but do that as you're taking action. Do that as you're making offers. Like do that as you're like actually getting out on the street and doing the stuff. Because there's no magic pill out there. There's no one podcast where it's immediately going to click. It's all stuff that's going to just kind of help you keep your mindset, but action is the most important thing. And like get that one deal. Like you said, that first deal was a loser, but was it really a loser? How much did it teach you about real estate? You know what I mean? Like that's not a loser at all. That's a huge learning experience, right?
Yeah. And I mean, of course, there's ways to hedge from doing what happened to me. I didn't have like a great mentor or a really good real estate agent or something on that first deal. I bought it off market, and that was part of the learning curve, because I didn't do an inspection on it. Like there's just a lot of things that I did wrong with that deal. So that's not a deal to replicate. But to Brandon Turner and your point, like if you literally buy a deal that's average deal that cash flows, that you do an inspection on, you make sure that there are no sewer issues. If you're in an older city like Metro Detroit and New York, I'm sure New York has a lot of sewer issues, like making sure sewer is not an issue, making sure foundation's not an issue, making sure plumbing and electric and the big ticket items aren't an issue. If you make sure those are good, you get in a pretty decent area, you vet your tenant, and you find a good tenant, and you just hit a single. What you'll learn from it, the confidence you'll learn from that deal will far outweigh any monetary gain you could have got from that first deal, because that first deal isn't going to make you rich. The second and the third and the 10th deal and the preceding deals are going to end up making you rich in real estate. That first deal, focusing on hitting a single, gaining that confidence, it'll just exponentially push you, in my opinion, in your real estate career.
Oh yeah, and it did for me, and I sometimes I think like, what if I didn't get pushed, right? Like, what if I didn't have that lender? And I try not to think about it, right? Because again, I suffer from it so badly, and I'm sure there's a lot of people listening that are in the same world, and they feel that way sometimes. But yeah, man, listen, and here's the thing: I've had plenty of mentors throughout my real estate career, and the other thing is too is the same way, like the real estate mentors, they help, right? They help shorten the learning curve for you. They help, kind of hit the fast forward button on a lot of stuff, and they look over your shoulder, but you still have to leap, right? Like they're gonna, again, you can teach a man to fish, or you could give a man a fish, or you could teach him to fish, and he eats for life, right? Like they could, you got to go fishing, right? Like you have to get after it. Like you have to cast the rod. Like you can't expect anyone to oversee everything that you do. Like the best students that come through my program are the ones that like just do, right? They ask me the least questions. They're the ones that are like the most just proactive on like just like taking a little bit of the resources that I give them and then just going after it and hitting it, right? Like they're not over analyzing every step. The guys that get caught up are the ones that are just like thinking through like 17 different situations of each step, right? Like do the step and then find out what happens, right? That learning experience is going to be way more important than just asking me, to give them a ton of answers, right? So, and my mentors do that for me too. I find myself doing the same thing that I'm talking about. Like we're all victim to it, right? Like, I tell people all the time, like, a mentor is there to tell you things that obviously aren't obvious to you, right? Like if it were obvious, if it was something that you understood, if it was something that were obvious to you, you would have done it already, right? The thing is when a mentor tells you to do something, it shouldn't make sense, right? Because if it did make sense, you would have done it. So they're pushing you to do the right thing, but at the end of the day, you're the one that has to actually take the action.
Yeah, no doubt. And like you said, I mean, finding finding mentors a lot of ways comes in just adding value to people's life. At least for me, I've the people that I consider a mentor, I've never really asked them to be a mentor. I've just provided value, and in return, I've been able to breathe in their osmosis.
Yeah.
And in return, they've given me some very, very valuable life advice. And so just providing value to people, and getting around them and learning from them has paid great dividends for me. And I see that replicate itself all the time. And like you said, action, failing forward, is basically, I think, what you were talking about. And
Absolutely.
and
It's scary, but it's
yeah.
super true. It's super true. Failing forward is, there's never failures, only learning experiences, right? So if you always have that mantra running in your head, like you're going to be successful.
Yeah. And my favorite thing, Gary Vaynerchuk talks about it all the time, like within his podcast. Like, he's like, people tell me all the time that I just repeat the same content. He's like, I hope so, because my goal is that you listen to me for a shorter period of time and then you're off doing whatever it is that you were set out to do, and so
Exactly.
his mantra is just about action. And so, yeah, I mean, this industry can be brutal at times. But if you consistently take action and you surround yourself with the right people, like you said, the right lender, you gotta search for 203K. I say the same thing about real estate agents. It baffles my mind that maybe less than 10% of real estate agents actually invest. They're within an industry and they don't actually reinvest. And there are a lot of reasons for that. But finding the right, if you're going to use a real estate agent or even wholesaler, it doesn't really matter. Somehow you're probably going to find your first few deals. Either one of those, you have to be very true, because you talk about it a lot. Wholesalers are, I would say 98% of wholesale deals I see, there's only like 2 wholesalers in my market that I'll actually trust the numbers verbatim. And almost all the rest of them are just overinflated ARVs, underinflated repairs, and so
Right.
you just have to really vet the people that you're getting deals from. And same thing with the lenders and finding good mentors, agents and lenders.
Yeah. Trust your gut. I just made a post the other day, getting real estate deals is part numbers, part trusting your gut, man. Like, I think that's just an overlooked thing. And it makes people uncomfortable because you can't quantify it. You can't quantify gut feeling, but you'll just know on some things, right? Like if the deal stinks and you feel weird about it, like chances are it stinks, right? Like, it's not, there's just a lot of instinct in this game. And unfortunately, like I said, like it's uncomfortable to know because people like tangible things. People like their handheld, people like step-by-step, but the reality of it is that you're going to have to just kind of go with your gut on some stuff. And like, you're just going to have to, like you said, just fire on some things and just do, like Gary Vee always says, like, just do, like you'll figure it out, but just do it.
Talk people through the course, what they can learn. I mean, this is a great time right now. It looks like around the country there's a little bit of restrictions going on, maybe a little bit more heading into the winter. Maybe people have a little bit more time. If they're looking forward to 2021 to potentially capitalize on some of the foreclosures coming, utilize maybe the 203K loan, which is flipping on training wheels, house hacking and Burr on training wheels. What does your course offer? What should people look forward to?
Cool, man. So yeah, over the last couple of years, I've really been kind of molding what works for people, seeing my students and seeing people that follow me, what works for them, what doesn't. Obviously this has been a learning experience for me too. I never expected teaching people this, right? It kind of came out of literally a need from people and people hitting me up on Bigger Pockets, people hitting me up in real life, just being like, how the heck did you do this? So it's kind of been a labor of love for me the last like year and a half since I've created the 203K Way community. So really what it's morphed into is what I found probably in the last year most specifically, is, the guys that I work with, the guys and gals that I work with that do the best are really the ones that I work with really one-to-one. So I've kind of created a very like small mentorship program. It's like a close to 100% success rate. But basically what it is it's my whole 203K way system. It's basically, the step-by-step from, getting approved for the loan, writing it out, to planning the project, getting your contractors in line, how to find the right deal that works perfectly for the 203K, and then moves down the process of finding tenants, renting it out, and then, leveraging that deal into future deals, which is really the most important step of the process, right? It's like using this first deal to basically finance and be the foundation to all future deals for your real estate journey. So I have something called the first property formula, and that's really the system that I use to get that first deal under your belt, or your next deal under your belt. First property formula, first property being the first property that's going to build all your future deals. And then, along with that is just me working one-on-one with people, coaching, talking to people one-on-one, and really just helping them over the shoulder. So, what I put together is I put together a live training for people that are really maybe on the fence about whether this would work for them or not. You can get it at the203kway.com/free training. And basically, it gives people a whole 30,000 foot view on, the way I basically did this deal, and how you can replicate it yourself. And then if things work out, you have some options there on potentially joining the group and working together and having me look over your shoulder. I tell people all the time, my content, I tell people more than enough stuff to do this on their own, right? For people that are looking to kind of press the fast forward button on the process a little bit, or just want to really, like I said, you want to have like 50% confidence in what you do. If you want a little more confidence, the 60, 70%, and you want to make sure that you do it right the first time, I offer that support for people.
Fantastic, man. Fantastic. So kind of fast forwarding after house hacking, you turned to flipping. You've done a few this year. You're about to close on another one. Walk us through kind of what that's been like, flipping now and being more active with contractors more often, and sort of what you're looking for in that industry for people that maybe are also, maybe looking beyond 203K. They're going to do one, and maybe they would like to flip like you. Talk a little bit about that process.
So a couple things, man. So basically, I got into my next deal 6 months after my 203K deal. I did a flip 6 months later. Basically, I used the equity that I built on that one property, and I parlayed it with some hard money, and did a small little deal. And it was a quick fix and flip. Made a nice little profit on it, and just kind of kept rolling it from there. I think. So this year has obviously been a challenge with everything going on and foreclosures. Typically in the past were always my bread and butter, right? So since they've been gone, and kind of offloaded off the market, I've had to restructure the way I do things a little bit, right? And put more focus into off market leads. That deal that we were talking about earlier, the one that I have coming up, that's an off market lead, and that's not my forte, right? I'll never sit here and try to be an expert on some of these flipping tactics, right? But the reality is I knew that I had to make a change. I knew that I couldn't just buy off the MLS anymore. I knew I couldn't buy foreclosures. I couldn't depend on asset managers that I typically dealt with that used to get a lot of foreclosures. I needed to really get out there. I literally drive for dollars, old fashioned way of doing it, but it freaking works, man. And, I've had some leads come through, and, I have this one that I'm about to tie up and hopefully close on very soon. And, it came from that off market lead, but it took me a couple months to get the ball rolling on that. I won't lie. I think the biggest thing that I've taken away from this year is just being true to my numbers. There was a lot of deals like right when COVID started that I stayed true on my numbers on, and I didn't flex, and I didn't fall victim to the feeding frenzy that's going on. And it was very hard for me to do because, again, part of me just wanted to get these deals done, right? But I knew at the end of the day, it wasn't worth losing my shirt on. And I think sometimes having the power to say no, especially in this market, is really underappreciated, right? Like, I think saying no to a bunch of deals that could have potentially really wiped me out was probably the best thing I could do this year. And it also gave me the opportunity to really focus on the 203K way and building up the content for that and just helping more people rather than helping myself. So, going forward, it's just trying to keep leveraging what I've already built and really get to the point where I'm flipping, 10, 12 houses a year. And, hopefully from there, who knows where I'll go. But I just love it. That's the thing too. At the end of the day, there's just a passion there. I never thought that real estate would be the thing that makes my clock tick, but it really does. And I find myself always looking for the next deal. My wife and I are looking for our own house right now. And it's funny, like looking at it from the different angle now, and trying to see how we're going to do that. And it's funny, like trying to look for your own forever home and not look at it through the eyes of an investor. It's been a challenge. It's been very funny, too, like just seeing how I react when we look at properties, and my wife telling me like, this isn't an investment deal, but I look at everything as an investment. So unfortunately it's a curse.
Right. For sure. So are there any books or podcasts recently that have helped formulate your mindset and sort of helped you through this year?
Yeah. So there's been a couple. I'm just trying to think. I think like getting my, obviously there's been a huge shift in the way that I manage my time, right? Like everybody's schedules like basically completely changed. A lot of people's, right? For me, I have my engineering job. I still do that. And, it went from like having to report somewhere to having to work from home for that. And just, my whole daily schedule and like I'm a creature of habit, and like having that daily schedule completely flipped upside down was something I didn't expect. So there's a book, and it's gonna kill me because it's not in here and I don't remember the name of it. I could get it and you can maybe put it in the show notes, but it's basically talking about Plan Tomorrow Today. Yeah, Plan Tomorrow Today or something like that. But basically, really what the book is about is really just getting some structure in your life and like kind of, building yourself to set yourself up for success. The biggest issue that I found in my business and my personal life is just being reactionary versus proactive, and making that shift, like just planning your next day, just planning like the three most important things that you need to do, but writing them down on a piece of paper in your planner the night before. It's crazy the effect that it has on your stress level, that it has on your productivity, and like little stuff like that. Like a lot of my time just keeps on getting sucked. And I'm sure you can appreciate this. And, never having that level of attention that I needed to pay to all my different businesses and everything else that I have going on. If you don't audit your time correctly and you don't really protect your time, this whole game could really eat you alive. So just focusing on planning my life more accordingly has been a huge focus this year, and it's proven to help me so much.
I can definitely appreciate that. So we mentioned a little bit earlier, talk about your website and where people can find out more about you.
My best resource is my Instagram page. I don't know why it became the main watering hole where I give all my information, but I have a great community on there, and all the followers on there are super engaged and everything. So I continue to post like all my best tips and content on there. So at the 203K way is a great place to find me and find some of my best content. My New Year's resolution for this year is to really start working on my YouTube channel. So you could just look up the 203K way on YouTube. And then you're a member of my Facebook group. I'm sure you could probably attest to a lot of the cool golden nuggets that are in there and a lot of the 203K professionals in there. So that you just go to facebook.com/groups/the 203K way. And just jump in. Well, say hello and ask any questions you have about the 203K loan or renovation loans in general. You'll find out very quickly that there's a lot of really supportive people in there, people like yourself who have done these loans, and you've been a great resource to the group. And I'm always appreciative of your input you put on people's questions. So, just continuing to build the community and really help people out.
Yeah, for sure. A lot of people in the group, a lot of informative questions. People just asking questions that people want to know, need to know, and maybe even questions for newbies that they had never thought of. And maybe maybe you had briefly touched on it in your course or in your book or, on a YouTube video or whatever, but it didn't kind of register. And so it just brings a whole new light. I know this morning I saw somebody asking about whether, the payment starts right when you close on a loan or when you're done with the renovation. So just all sorts of things. Great community. You get to meet a lot of great people in different markets. And you've got a great community going in there.
Oh yeah, and it's been a pleasure just seeing. I mean, the coolest thing is just seeing people keep on getting wins and people like really starting their careers off with this. And again, if you want to just check out like the 30,000 foot view on this whole process, I know we didn't get too much into the tactics today, but I just put up that free live training. It's about an hour and 20 minutes, but it's really an opportunity for me to kind of give everybody like the full step-by-step process, start to finish, how I made this happen and how you can basically copy and paste that whole process. And again, you can go to that at my website, the203kway.com/free training. And anyone that's interested in it, you could use that as a resource. And I tried to really pour my heart out on that. And I worked hard on that training, and it's kind of been a labor of love the last year or so, is like kind of solidifying that training to make sure that I've answered everybody's burning questions about this process and really how they can make it work for them.
Yeah, no, for sure. As I said at the beginning of the show, I mean, this has a special place in my heart. I think finding anything with training wheels is important. Finding whether it's people or solutions like a renovation loan to help you bridge the gap, and finding people like great lenders with a 60-second hack, consultants by figuring out which ones are doing the most deals in your market, using the 80-20 rule, finding real estate agents that are using the 80-20 rule, the 20% that are highest producers, helping investors, just finding all the people on your team, and all the intricacies of doing something like that and mitigating your risk is important. And so that's why we send people your way and implore people to check out that free training, check out the course, read your book, things like that, just to get informed, get prepared, whether you're going to do one now, whether you're going to do one when things start to be a little bit more conducive for foreclosures and investors and things. There's opportunity out there, and I think a lot of people can get a lot of value from going to your site.
For sure, man. I think you touched on a lot of good stuff there, but to chime in on that, nobody's self-made, right? Self-made is kind of like it's a very egotistical thing to say, right? I mean, I'm not self-made. I'm made by I'm a product of all the great people that I surround myself with. And being able to have this platform, being able to, talk on podcasts, be able to network with you, be introduced to other people and kind of be the support system that we need. I think I've said it before on your podcast, real estate investing is a lonely game, man. Not many people know about it, and it's hard. You listen to your podcast and then you go back to your family who doesn't really understand what your goals are and doesn't understand the way that you think. And, having these groups, having these podcasts, having these things, these outlets where we can continue to like keep our mindset right is so important. And it's been a cool year in the sense of, I've been able to network with so many great people and help other people and have other people help me. And I will say the real estate investing community is really probably one of the most selfless communities out there. And I love seeing their support, and I love seeing all the information that people are willing to give to each other for free.
Yeah, no doubt. So everyone out there, go follow at the 203K Way. Incredible community. Find out more, get plugged in, get into his Facebook group, check out his free hour and a half, I believe, training that you talked about. He's got a book as well that I read a while ago, has a lot of great nuggets. He's got the course. Go check him out. Get involved with the community. Ask questions. And Matt, we really appreciate you coming on.